In this video, I'm going to tell you the 5 most common mistakes new traders do when it comes to day trading. What is going on, everybody? Welcome back. In today's video, we're going to be talking about the 5 top mistakes a lot of new traders do when they come across the financial market and when they come across trading in general. Now, in my opinion, the most common mistake a lot of new traders do is trading with emotions, right? And the reason why this is number one for me is because your emotions, you literally taking every single trade based on your emotions, right? You've just known about the forex market, you've just started trading, and you want to make money and you want to do it quick, and you think this is it, I'm going to be quick next month, I'm going to be rich, right? And then you start over-leveraging and you start opening positions with a bigger lot size, and then you end up blowing your accounts and all these things, right? Now, all these factors come from emotions. Your emotions get the best of you and make you trade too much, too soon, either too late, or so this is why this is the number one mistake that a lot of new traders do when it comes to trading in the financial market, in the forex market, is they trade based on emotions. The number 2 mistake is trading without a trading plan, right? Trading without a trading plan is like you're looking at a map, right? I see it as you're looking at a map and you just see roads, right? You see paths, you see roads, and you're just following the road, but you don't know where you're going and where your next stop is. Without a trading plan, you're just like basically drifting and going nowhere. But if you have a proper trading plan that you can follow, right, then you can basically you basically have this map that tells you where you should go, where you should turn, where you should stop, and everything like that. So you basically have it all right there. And based on that, you can look at the market and say, does this trade fit in my trading plan? Like, is all my confluences and my rules are matched with this trade that I'm about to take? This is why a trading plan is so important, and a lot of new traders don't have one. They just think that they can just come in, press buy, press sell, and then they can just make money, right? It's not as easy as it sounds, right? The number 3 now, right? Number 3, the third mistake is they don't use proper risk management, right? Well, what this basically means is they sometimes risk more than they're willing to lose, right? Or they take profit is the same as their stop loss. So they basically have a 1-to-1 risk reward ratio, if that makes sense. Risk reward is everything. For me, my minimum, like, I would never take a trade if it's a 1-to-1. It's not worth it. Like, it's just not within my trading plan. It's not within my rules. A minimum of 1-to-2. So basically, whatever amount of money I'm willing to lose, I'm risking on this one specific trade, I'm basically targeting to make double, right? So if I'm risking $100, I'm thinking of making $200 on this trade. That's a minimum. Anything below that, I'm not taking the trade. Risk to reward is very, very important, and it is actually the base of how I like trade. Like, if it's not a 1-to-3, 1-to-4, it's not that important of a trade. It's not of a good trade to me. It has to be at minimum of 1-to-2. Basically, I'm willing to make double the amount of money that I'm losing. Number 4 now, I think. Yeah, number 4. is over-leveraging. Over-leveraging is when, let's say you now have a trading plan, you have a trading plan, you have your rules set, you have your map, you have everything, right? You've been studying the financial market, you know exactly what you're doing, you know what a bearish engulfing is, and you know what a support and resistance is, and you're ready, right? You're ready to attack the market, and you're ready to take a trade. But you over leverage, and you open a position way too big because you're thinking that I want to make as much money, like this is the trade where it's going to take me from 0 to 100, but that specific trade ends up being a loser and blows your whole account. And this is such a huge mistake. Like, I'm guilty of it, like, right? I've been there, I've been through it. And the more I did it back in the day, the more I realized that this is not trading. This is not how it's supposed to be. It's wrong, you know? Because nothing in this market is guaranteed 100%, right? So every trade, you must basically calculate your risk. You must say, I'm willing to pay the market this much to find out if my trade is a winning trade or a losing trade. This is how I look at it. Whenever I enter a trade, I'm like, okay, let's say I enter a position with a standard lot, right? And I have a 10 pip stop loss, let's say, for example. That means I'm willing to lose $100 on this trade to find out if this trade is a winning trade or not. So basically, I'm giving the market $100. I've already lost it in my mind. As soon as I enter a trade, I'm like, okay, I've already lost this money. I don't care what happens now. If it's a losing trade, it's a losing trade. It is what it is. I go back, study my loss, and so on. So every time before I execute a trade, I think like, okay, I'm gonna pay the market this much to find out if this trade is a winning trade or a losing trade. And I feel like if you look at it this way, you realize that, damn, this position is way too big for me. Like, if I lose this trade, it's gonna blow my account. I'm not gonna do that. Then it makes you think, it makes you like realize what you're doing, and then you take a smaller position, a smaller lot size position on your trade, and then, you know, so this is also a very, very common mistake. You guys gotta pay attention to these small details. And also, one little thing I want to talk about is a lot of you guys have like a 5 pip stop loss, but a 100 pip take profit. This is unrealistic. Like, the market can wick, right? The market can fake out people. The market can wick and stop people out. We have to be smarter than that, to just put a 5 pip stop loss, like unrealistic expectation. I'm gonna risk 5 pips, but I'm gonna make 100 pips. It's not real. It doesn't work like that. The market can fluctuate. The market will move. You gotta give it some time, right? Let's say you know that okay, it's gonna go up, right? It's gonna go up and it's gonna go up, but you have to give the market some room to fluctuate, because if you have your stop so tight next to, it'll stop you out and then move in your direction. So you have to have a proper stop loss in place, a proper take profit in place, so you don't miss out on your, let's say, take profit. Let's say you had your take profits way up, and the market gets to a certain area in the market, and then it reverses from there, and you were in so much profit. Now you lost a winning trade. You lost a winning trade, right? And all right, and mistake number 5, guys. Mistake number 5. This is very, very important, and it is lack of patience and discipline, guys. This market is such a waiting game. Like, you guys have no idea how important this is. The perfect timing, like, obviously you can never predict when the perfect time is, when the market's going to move exactly, right? It's unpredictable, but like, the patience for your setup to play out, the patience for your pattern to play out, the patience for the market to come to you, not you chasing the market, right? It's so hard. Like, honestly, it's one of the hardest things that a new trader can get over and overcome is waiting. Like, you know, some people, you know, swing traders wait days and weeks for their setup to play out. because they entries is on the 4 hour time frame, but they setups would be on a weekly or a daily, and it takes weeks. It takes weeks for them to find a trade, you know. So can you imagine how like, imagine you just sitting there and you're waiting one whole week just for a setup. Honestly, this is why I'm not a swing trader. I can't do it. I tried, it's just way too long for me. I'm not a swing trader. I like intraday. I like to be, you know, I like to hold it a little bit, like within a day. My trading is within 24 hours, right? I may hold a trade for longer, it depends on the trade, but I'm not a swing trader. I'm not a scalper. I'm like in the middle. I scalp sometimes, I day trade sometimes. I never swing because I just can't be bothered to wait weeks and weeks for a setup. So patience. This game is such a patient game, because if you enter too soon, you're gonna lose a trade. You're gonna lose. You're entering too soon. You're entering before the setup. The retracement is still happening, and you're busy buying, but it keeps going down because you didn't wait, or you enter too late when the move has already happened, right? That the market has dropped, and now you enter for a sell, but then the move has already happened, and then the market starts going up from there. So patience. Be patient with your setup. Let the market come to you. Don't chase the market, right? Now, I hope you guys enjoyed today's video. I know we didn't show any charts or nothing, but also one more thing. Thank you guys so fucking much from the bottom of my heart for breaking 100 subscribers. This has been a goal to me, like, since I started this channel a few months back. And my first goal is to hit 100 subscribers, and we've passed that. We're now sitting at 107, I think, 110. But I just want to thank you guys so much for the support. Thank you guys for subscribing. Thank you guys for coming back. If you do enjoy the content, please do let me know in the comments section below. Smash the like button and subscribe, and I'll see you in the next one. Peace.